Good morning, guys. Just creating this video as a follow-up to my last video, which was the first video in the educational series, which we talked about higher time frame bias and the 2040 6-day look back. This is really just a quick follow-up to that video, in case any of you were looking at your own charts and trying to follow along what I'd posted and what the direction and the bias was and all that. So it's kind of like an unofficial part 2, I guess. And it's going to be a relatively quick video as well. So we're just going to start with our monthly. So as we know, we saw on the monthly, we saw the dip of this low here into our fair value gap inefficiency, and we're expecting it just to simply move back up to this monthly high, which is part of this fair value gap. So this is our rough monthly bias, external to internal. So on the weekly chart, what we were expecting last week, which is this candle, we're expecting this candle to open, come down for the low of the week, and then move up and break the previous weekly high at a minimum. And then obviously we've got our monthly DOL here, which is this monthly high, which just quickly pop onto the daily chart, and we'll turn on the look back. You'll see that this is our 60-day high, which is our target on the monthly. And we've got this 40-day high here on the weekly. So these two areas, this is the 40-day high, and this is the 60-day high. So you can see that we haven't hit, on the weekly, we haven't hit any of these targets yet. But what we did do is we ended up running the previous week's high, but it didn't happen last week. It happened, I think it was overnight. It was early Monday, before London. So it's depending on whether you, because I mean, you could have been swing trade in the 4-hour chart. In terms of session trades, you wouldn't have got this high. If you were swing trading, you would have got this high. But for now, we're just looking at what happened last week, which was this candle here. So it's what is known as an inside week, because it didn't break the high or the low of the previous candle. And normally when you get an inside week, the next week will break out, which it already has. It did it early Monday. It doesn't mean this candle's done for the week. We'll go into this briefly at the end, but we're just looking at what happened last week. We were expecting a down and then an up. So we were expecting a low on the Monday, Tuesday or Wednesday, and then Thursday and Friday we wanted the open high close, but we actually ended up with a bearish candle. So if we have a quick look on the hourly, and we can have a look at our week. So let's just get rid of that. And I'll just make these a bit thicker. And that one there. Okay, so this is Monday. This is the opening on Monday, so we'll just put, and this is the close on Friday. So what happened is price came down and reversed on the Wednesday. So far this was exactly what we were waiting for a low on either the Monday, Tuesday or Wednesday. So we got the low on the Wednesday, and then price started to move up. Initially we went above the weekly open, so this would have been now a bullish weekly candle, but then late on Friday we dropped back down into the range. which gave us our bearish candle. So what when this happens, it doesn't mean that our analysis failed. The analysis was actually correct, because what we're looking for with these candles is we're looking for what kind of weekly template we're going to get. Now with this weekly chart, this is always just like our bias, so it's just where I'm preferring to look for trades. So if we've got this, let's get rid of that. If we've got these higher up targets, I'm remaining bullish until we hit these targets. So every day I'm looking for an open, low, high, close, open, low, high, close. But our targets, when we are session trading, we like to look for the previous day's highs. And again, I'm not going to go into this in this video because this is for future lessons, but all we know is at the start of the week, we're expecting an open, low, high, and then close. So we got our open low and we got the move up. It's just we didn't break above the previous week's candle until early Monday, pre-London. So the move happened, it just happened late. But we just trade, or I personally trade the daily sessions. So for me, I would have been catching shorts, confirmed Wednesday, and then looking for longs up to this high here. So if we take each day, so for example Monday, this Tuesday, I'll tell you what, let's do it this way. We've got Tuesday here, we've got Wednesday here, Thursday and Friday. So for example, once we hit the Wednesday low of the week, all we're looking for is, this is the previous day, previous day's high. So longs, if we took a long here, this is Wednesday's high. If we took a long here, target previous day's high, target previous day's high, target previous day's high, and then we had this target previous day's high, which was actually the Friday here. So each day we're just looking for it to run the previous day high, and then we can take extra, we can hold extra, but this is predominantly our first target. So once we've had this low on the Wednesday, which was the Wednesday low of the week, we can go 3 days back, this high, and this high. So we're expecting price to come and take these highs, which it did eventually. So even though and I'll get rid of these, even though our weekly targets are high up, they don't need to hit these levels on the week. We just need to be correct with our bias, which is exactly what happened. Wednesday low of the week, price moved up. So I'll do another one of these from scratch at the start of next week. So maybe on the early on the Monday morning, we'll look at where we are, and I'll do the same as I did this week, and it will be the start of lesson 2, because I'm going to add some more things in. But this was just really an update on how this week moved, and how even though our levels didn't get hit, our bias was correct for the week. Okay, hope you enjoyed this one, and I'll see you in the next.